Tips to save income tax on salary. You can achieve income tax reductions by undertaking the following points. 1. House rent allowance, HRA. For those who live in a rented house/apartment, 50% of your salary is eligible for the HRA exemption if you live in a metro city of India. 40% of your salary is HRA exempted if you live in a non-metro city. Actual rent paid each month, minus 10% of your salary. Salary here means the basic salary, including the commissions and dearness allowance. 2. Leave travel allowance, LTA. For travel within India, an employee can avail exemption for the trip under LTA. This exemption is only for the shortest distance on a trip. Only for the trip taken with your spouse, children, and parents. This can be claimed. Hence, on incurring the expenses and submitting the bills to the employers, you can claim this exemption. 3. Employee contribution to Provident Fund, PF. Provident Fund is a social security initiative where the employer and employee contribute an equal amount every month toward employees' pension and Provident Fund. This is 12% of the basic salary. Government decides the interest rate, which is about 8.65%. Therefore, upon maturity, the returns are exempted from tax. Also, EPF contributions can be claimed for tax exemption under Section 80C of the Income Tax Act. 4. Standard deduction. Standard deduction replaced the conveyance allowance and medical allowance. Post the 2023 budget, employees can now claim a flat 50,000 rupees deduction from the total income, thereby reducing the tax outgo. Taxpayers can claim the deduction under old tax regime as well as new tax regime. 5. Professional tax. A maximum of 2,500 rupees can be levied as professional tax on any person per financial year. The profession tax paid by an employee is allowed as a deduction from his/her gross salary income. 6. Exemption of leave encashment. Some employers allow you to carry forward some amount of leave days and allow you to encash them, while others prefer that you finish using them in the same year itself. 7. Exemption under Section 89(1). As per Section 89(1), any salary received in arrears or advance is allowed for tax relief. Exemption from the receipt upon opting for voluntary retirement. As per Section 1010(c), any compensation on voluntary retirement or separation is exempted from tax. The exemption is subjected to the prerequisite that the receipts comply with 2 Also, the maximum compensation received should not exceed 500,000 rupees. 9. Gratuity. Gratuity is a retirement benefit that is provided by an employer if an employee renders 5 years of service in the organization. However, the amount is paid upon retirement or resignation. 10. Pension. Pension received is considered as salary and thus is taxable. 11. Car leased by employer. If someone is making use of a car lease policy offered by his employer, he can drive a car leased by his employer. Therefore, save tax on car ME since he may not require buying a car. 12. Expenses related to internet or phone. Expenses incurred in using these devices are either prepaid by some employers or can be reimbursed by the employees. Tax benefits can be claimed on these expenses. 13. Donations to political parties. Any donation made to political parties is exempt from tax if it satisfies certain conditions under Section 80 GGC. 14. Meal coupons. Some employers provide meal coupons like Sodexo or Zeta to their employees. These aren't taxable up to 2,600 rupees PM. 15. Medical insurance. A salaried employee can claim a deduction against the medical insurance under Section 80D. Such medical or health insurance must be taken to cover their spouse, dependent children, or parents. You can claim 25,000 rupees against insurance premium paid towards to cover their spouse, dependent children. You can claim another 25,000 rupees against insurance premium paid towards to cover the life of parents. If the parent is a senior citizen, then you can claim 50,000 rupees instead of 25,000 rupees. 16. Education loan. There is no maximum deduction amount that can be claimed against an education loan according to Section 80E of income tax. The interest you pay on an education loan is entirely tax-free for 8 years, as you can claim tax deductions against it. 17. Home loan. You can claim a tax deduction for home loan ME of up to 200,000 rupees in a financial year under Section 24. The loan must be to acquire, construct, repair, renew or reconstruct the property. Moreover, you can claim the tax deduction of principal amount repayment under Section 80C of up to 1 rupee and 50 paise lakhs. 18. Mutual funds. An investment in ELSS equity-linked savings scheme qualifies for a tax deduction. You can claim deduction under Section 80C of up to 1 rupee and 50 paise lakhs. ELSS is a tax-saving mutual fund that invests more than 65% of its corpus in equities, and the rest of the 35% in debt instruments. Every month, the employer deduct a part of your total income tax as tax deducted at source, TDS. This is a significant portion for a salaried employee. The employer provides details of the tax deducted in Form 16, TDS certificate. While filing returns, you must make the remaining payment. Don't forget to like and subscribe for more informative videos.